Tuesday, July 15th, 2025, Monaco 64, home of alternative economics and contrarian views. Well, I think we need to keep our eyes on the ball. And what do I mean by that? Well, there's a lot of distractions out there. Epstein, Russia, tariffs. Yes, they're important things, but more importantly for you and your family and your financial, let's say, future, is the fact that the powers that be are going to continue to inflate. They're going to continue to print, to borrow, and all that helps, of course, those closest to the monetary spigot, closest to the central banks. It's the old Cantillon effect. By the time that currency arrives for the public, it's already devalued. So that's why I think we need to focus on the finances. And right now there's a couple of things or indicators that are pointing to possibly a major financial event. And those two are silver and the Japanese government bond market. We're going to look at that first here. Then we're going to look at what's happening in the UK, where I'm based. Interesting, well, very important announcement, by the governor of the Bank of England regarding interest rates. And then I'm going to talk about Newmont Mining. And of course, that's not financial advice, it's just my opinion and what Newmont Mining is telling me about the gold market, silver, the miners, and so forth. So let's start with Japan and silver. Well, I spoke to a friend recently, and he said silver's pointing towards a major financial or banking crisis. And I asked him why, and he said, well, the last time silver almost reached 50 in 1980. Yes, the dollar was in trouble. Back in 77, did you know that the US Treasury issued foreign currency bonds, like in Deutschmark and Swiss francs, because people didn't want the dollar. So when the dollar or silver reached almost $50 in January of 1980, well, the Federal Reserve and the regulators had to basically rig the game, stop silver from rallying further. Of course, the consequence was that the Hunt brothers were bankrupted. But that wasn't even enough, because eventually Paul Volcker had to let interest rates, short-term rates, rise to like 20%. The 10-year yield rose to above 15%. Yeah, of course, that caused a major double-dip recession in the early 80s, but it saved the dollar. But at the time, debt to GDP was only 35%. So that was what silver was pointing to. And then we move forward to 2011, when silver almost touched 50 again. And the European sovereign debt crisis was raging, and it raged until 2012. That had to be stopped, of course, by the ECB. Mario Draghi, the president of the ECB at the time, announced that they're gonna do whatever it takes to stop the euro from collapsing, to stop the Mediterranean or Southern European debt crisis spreading towards the Northern European bond market, and eventually US and Japanese bond markets. So he kind of stopped a global sovereign bond crisis. And silver was a great indicator then. So that's why my friend said, well, I think silver is pointing to that again now. He could be right. And where do the JGBs come in? Well, I've been talking about the Japanese yen, the Japanese government bond market for many years. I even have a file or a playlist called the Japanese yen carry trade, and how important it is to providing liquidity to the markets. And basically, in a nutshell, what it is, the carry trade, is that it allows investors worldwide to borrow very cheaply in yen to buy assets in other currencies, and it keeps the everything bubble going. But in the last 2 years, like with every other major government bond market, inflation has been rearing its ugly head, and the interest rates have had to be raised. So Japan has gone from a couple of decades of zero and negative rates, not just in the short end, but in the longer end, to a juncture right now where long-term yields in Japan, like the 20-year yield, 30-year and 40-year yield, are spiking, and even the 10-year. So the 10-year is now at 1.6 or thereabouts, 20 years at 2.6. The 30 and the 40 are spiking above 3%. And Japanese investors their holdings are losing value at a rate of knots. Japanese CPI, or inflation, that's rising way above 2%. We've got a upper house election in Japan on the 20th of July, on Sunday. And the current government, which is a minority government in the lower house, is expected to probably lose the majority in the upper house. And the opposition is pushing for lower rates, for more fiscal and monetary looseness. And that could be a trigger, an even worse trigger than what we're seeing now. And it could force the Bank of Japan to slow down its tapering. Bank of Japan is still doing QE, but they are decreasing the amount of QE they do. They've been raising rates, but depending on this election, they could stop all that, and you could see bond investors get even more spooked. And Mama Watanabe could sell their government bonds, and that could also lead to Japanese investors selling their foreign investments, especially treasuries, and that could lead to even higher yields. We've seen that the curve has been steepening in the US. We're approaching 5% again in the 30-year. So yeah, it could have a ripple effect throughout the Western world. So we need to keep an eye on Japan and silver. And before I go into the topic of the Bank of England and the governor, I'd like to talk about our sponsor today. For those of you who didn't know, I'm away on holiday right now. Even when I'm traveling, I still need access to the internet to check my emails and appease the YouTube algorithm by uploading videos for you. I'm sure many of you who are self-employed and don't really get days off can relate. When we're away though from home, we will connect to many unfamiliar Wi-Fi networks, and unfortunately, most of them are not secure. Public Wi-Fi networks, including those in hotels, are less secure than private networks. Hotel staff are able to see your online activity even when you browse in private mode, and much of your browsing history will be logged. A technology-savvy hotel guest could actually access these logs. This is what makes hotel networks attractive targets for cyber criminals. You may not even be connecting to the Wi-Fi at all. Hackers use devices called pineapples to imitate networks, and once you connect to it, they have access to all your internet traffic, which they can use to steal your personal information. Hackers will also use Booking.com to do phishing scams. Many people were sent urgent emails asking them to reserve their reservations. These emails looked exactly like the ones from Booking.com, with the only difference being a prove you're a human CAPTCHA. It's the CAPTCHA that's the trap using malicious commands to install Trojan virus onto hotel systems. Once the Trojan is installed, the names, emails, and card numbers of hotel guests are served to hackers on a silver platter. Luckily, Incogni will keep your personal data safe, even away from home. So to get started with Incogni, just create an account and give them the permission to work with you. Incogni scans data broker databases for your personal information and sends out removal requests. Progress reports will keep you informed about your requests, their progress, and how many have been completed. Incogni automatically rescans and keeps adding new data brokers and people's search sites to their lists. So here at Maneco 64, you can enjoy holidays, business trips, and sabbaticals with the knowledge that your data will be safe. So simply enter the code Maneco64 at the link below to get 60% off an annual plan and secure your privacy today. So, okay, yesterday or the day before, kind of lose track. I've been on holiday for almost 2 weeks. We're leaving tomorrow back to the UK. But anyway, the Times of London did an interview with Andrew Bailey, the governor of the Bank of England. And he said the Bank of England will cut rates if the job situation in the UK deteriorates. And I think that's very probable. We've had 2 GDP numbers that came in negative. They were unexpected. Of course, everything's unexpected for Keynesians. But I think what this does is that's going to spook bond investors as well. The 15-year gilt yield is just above 5%. Why the 15-year? Why am I talking about that? Well, because the average maturity of the UK government's debt is around 14 years. So that's not good. And I think if the Bank of England starts cutting rates while prices are still rising, probably in reality at 4 or 5%, the 3% or 2.5% number they give us has been doctored. I spoke about that in the summer of 2022. They changed the way they calculate the CPI, and of course it's made it lower. There's a video I talked about this, and I'm going to put it here if you don't believe me. But yes, that's going to spook bond investors, and coupled with what's happening in Japan, it could be it could be a major trigger for more selling throughout the Western world. And who knows, maybe we're gonna have a global or Western sovereign debt crisis. That would include the US, Japan, Europe, Great Britain, Australia, and all the major countries. And that would be a major event financially. So that's how I see this maybe evolving. Of course, things are always never certain in life. It's all about probabilities, but I think it's a big probability that this could happen. When? Well, who knows? Maybe this summer or later in the fall or autumn. So now let's look at Newmont Mining. I usually don't talk about miners in such detail, but the reason I'm talking about it is because Newmont is like a bellwether for mining investment, mainly because it's, well, one of the biggest, if not the biggest, gold miner in the world, along with Barrick and Agnico Eagle. Whenever regular investors, and by that I mean people who are not really too much into gold and silver and sound money, you know, the crowd out there, the mainstream financial industry, whenever they want exposure to gold for some reason, they will go to Newmont. And I have some Newmont. And as I've said before many times, this is not financial advice. This is my opinion. But yeah, Newmont, technically, if you look at this monthly chart, and the reason why I use monthly charts sometimes is that we need to keep the longer term picture in mind, because as Jesse Livermore once said, the big money really is not made by you being clever or anything. It's by you being patient and sitting tight and being right. So I've been looking at this chart for a while, expecting or waiting to see the breakout of this neckline. It's a neckline on an inverted head and shoulder, which is very bullish, unlike the head and shoulder top, which is bearish. And as you can see, we're breaking through that neckline. Of course, it's a monthly chart. We still have about 15 days or a couple of weeks till the end of the month, but it's looking very good. We're breaking through that. And usually the objective, price objective you get from a break of the neckline, either a top or a bottom, is the distance from the top of the head to the neck, to the neckline, and you measure that from the breakout. So what this chart is telling me is that Newmont could go a lot higher, could trade towards $100 easily, let's say by the next 6 to 12 months. So to me, that's indicating that, yeah, the finances of the world are going to continue to weigh on the world. And by finances, I mean the massive amount of debt that our governments, corporations, and individuals are going to keep taking on. And the only way to carry that debt is going to be through a devalued currency, and I think that's what Newmont is telling me. So there you go. I will be making another video that I'll post tomorrow morning. We are leaving tomorrow back home. Be nice to see Rudy again. And yeah, it will be business as usual from the 17th. And with that, I'm going to wish you all a very good day. Take care. Bye.